Hi everyone, I'm Mark from AFX Pro and the weekly roundup. So this week is going to be a little bit different. This is a lesson more in how the logarithms just do what they do to screw you over if you don't know what you're doing, that is. So quickly, we'll just have a quick look at a couple of trades on the normal PT3, and then I want to touch on this and just show you which may help you understand why things, when you go to smaller time frames, don't work quite as what you thought they were going to. So without further ado, let's come through and have a look at what they can construct. Okay, so we're actually in week 2, but the data was brought forward because of the leap year. In actuality, it's in week 1, but the codes are reading as week 2, so we'll stay with week 2. No great drama. Okay, first thing we're on, as usual, pound AUD, a run up here, nice run up. At the top here, we get a setup. 1, 2, 3, and there's a reason for having a stop out there which is about 10% out. Then it comes back down, and later in the night it has another go and does there. So position wise, it's okay on the chart. We come to the demarker and it's in a good position there. It's up at our trigger level and coming down. From there, that is all we see throughout the week that comes in. Pardon me. Here, drops through here. Not right by the demarker. If we have a look at the ADX, it's right by that, but we've got 1, 2, 3, 4, 5. It's gone too far. So this one up here went to 3 and it broke down. Once it gets to 4 or 5, it's all over Red Rover. You want to get out of it. And then the muck starts. And once we get to that there, you just cannot get out of that. In behind that there needs to be left well alone. Pound yen, down, down, down. Well, we're looking really in here somewhere to get a long trade. We're way down the gravy train here. As you can see, we got trades from last week in here, just closing out still. So here we go. We come down and we get nothing thrown up down in the bottom here. The demarker was down here. That was 100% wrong. We get to here. We've got nothing thrown up with the ADX. And of course, perfectly on top where they're trying to fake everybody out, we get the perfect 3 at 100% wrong, and it goes the other way. Then we get this here. So we've got a big, long thing here. It's twice as long as that. We've got that there. What do you do with it? It's in a perfect position with the demarker. It's one that you're going to have a look at it. I look at it and I'm not really all that excited about it whatsoever. If this would have been the other way around and a pink there, I would be. I sort of look at that and say, well, there's the width of the PT3. It hasn't even done one section of that up there, meaning there's not enough travel up there for that to complete a target down there. Right, so that's one that I would actually walk away from. And of course, this is, and I talk about EA every week because it's a big part of trading and what I do now. That's where it's impossible to code a situation like that in an EA to remove that trade. That's why EA works on just a pure numbers game. It is basically impossible to have a filter to remove that, but with our eyes, we can do that. So, there's a lot to be said still for manual trading, and there's a lot to be said for EA. So that one, I would not be all that interested in taking, and that's the reasons why. So, you guys have decided, yes, you're going to lay into this. So, we got bar 1, 2, 3, 4. Now, while those wicks have gone through there, there is not one bar in 2 hours has closed outside the section. At that point there, I would say, I've had a go at this. I don't like it. I'm getting out if I was in there. Of course, once you get past that, then it's set up this in here. There's the trend for the rest of the week. It's all in no man's land. So we get down to, you've got past that. You look at this one here, and even that still doesn't get down to our trigger level here. And it does do the target, but we didn't get down to our level. So, you know, you can say, oh, well, it's close enough. I can assure you, as soon as you start saying it's close enough, you're going to win that trade, and then you're going to lose the next 2 or 3. It's a game of following the rules. That's all you can do. And, of course, that's way up there. It's out of whack there, and that's in no man's land there. Okay. Let me just bring MT5 onto the screen. Okay, so I've made reference a few times of late about the 11th day of the month with the yen bases is the trigger point or the turning point for the month. Now, if you look back, let's just come back here. So we're on a daily chart right back here, and I've marked it. So we're back here in 2023. There's the 11th day of the month. It comes down. So it's basically, it'll do a 2 or a 3 section trade. If it's a wide formation, it will do 2. Here, a narrower formation, it's done more than 3 sections. So it's working there, perfectly here, and away it goes. There's the continuation on there. So we had 1, 2, 3, 4 months straight. Remember what I say, this market tends to work on 3s. So then we get to here. Right, by now, the logarithms, everyone's catching on, right? People are searching all the time. Oh, that's a good trigger point. So here we go. Here's the first one down. They run it half, and then they run it, and then they run it back. That's designed now to kill everybody that's just cottoned onto this in the last 3 months. Hey, if you do this at this, this is what they've done to counteract it. So they've done the whipsaw, right? And you get one, what's that, about 1.5 up? Or you get half down, 1.5 up, and then down to 2 sections. It finally does its 2 sections retrace. From there, we then go into, as you'd expect, sideways. So we've got now 1, 2, 3 months of sideways. We get to here, right, which is the October last year there, and it takes off from there. Probably you're still in the middle of that. So that's, you know, 1, 2, 3, 4. 1, 1, 2, 3, 4, and this is the 4th one here. We finally get this little tiny one. Everyone's nervous what it's going to do. No one's going to make the commitment. And there it is, and there's the 3 sections. 1, 2, 3. Right, again. So then we come down to here. Right, up, done that. Now we're back in behind this bar here. Well, it's in no man's land there, so what are you going to do with that? We don't really know. And that's what it's all about. So we had one good win again, and now we're back into the chop. And here we are back in, this is the December one, is it? Yep, meaningless in December. Then we get last month. Here it is here. Finally does its 3 sections. And we see this here, and that looks pretty direct, right? If you look at that on the daily chart. So now we come to what's happened last week. Here it is here. Everyone's expecting. There it is there. Up. And so far it's done. It's 2 sections. Now that looks pretty straightforward. You'd think, oh, this is a walk in the park, this idea. So You think it's a walk in the park. Let's just now come to a 10-minute chart of what it's done since the 11th of March. And this is why that unless you have got something that you understand where the market's going and have got the discipline to stick to it, this is why you're going to get screwed over. So we get the 11th of March. Here's the breakout of it. First of all, they break it out, and then up here to frighten everyone, they run all the stops here. That's to make everyone think the run's over, right? It comes down, it breaks past that. Everyone says, oh, gee whiz, it's going short. So where do they put their stops? Everyone puts their stops right here. So what have they done? They've created a resistance point, right? And they've put a big red arrow on it to say, hey guys, here, put your stops here. Come on, put them here. Put them here. And you know what? Guess where everyone puts their stops? They put them right there because, oh, that's got to be a great place. And you know what the logarithm's saying? Suckers, suckers, come to the party. Yahoo! When you see that, you're almost, I know I know what's coming. So we play the game. And of course, there will be ones then that in here, they've moved their stops up from down here. Oh, we're not going to get caught. And this is what goes on. This is the actual market flow of what it does. Right? So what they've got to do then is now get rid of those people that have brought those stops up there. So they run that down to there. They get stopped out. Now, we've still got the ones that are short up here, right? So bearing in mind, we've still got quite a few people here that think, oh, this is going to be, it should go long. You know, it's been going long for the last 2 years. So what they've got to do is get this train of thought that the euro yen's going long. They've paid out enough money for people that have been holding long positions. They have to do everything they possibly can to get as many people out of those bloody long positions as possible. Sorry, I think I said that wrong. Long positions. No one's in short. Everyone's long. It's been long. So that's all right. We're here. We go. We have another go. Right? So the ones that were really weak and could only last to the first pulse, they get smashed to pieces there almost instantly. Then we start this. Then we go into accumulation and distribution. So what they're working out now is it still safe to let it go up, or have we got a bigger job to do? And this is what the logarithms are assessing. Is the bias yet safe enough to let this go long? Right? Bearing in mind, we know that our target for this euro yen is, wherever it is, up here somewhere. Our target's at 162.39. So if we put that up on here somewhere, wherever it is, 162.40, up there. Right, doesn't seem far away, but let's see what happens. So the accumulation and distribution. So now we've got a point here, and we've made a bigger, wider point here, a really nice resistance point here again. Look at that. People look at that, and it's been confirmed here. That's got to be a great place to put your stops, hasn't it? So then it comes down here, and it gets right down to that there. And probably in there, the spread's wide. You don't see that on here, but that spread would have been widened there. So that spread somewhere would have been down around about probably there, which is just convenient enough to take everybody's stops out under there. So that's the resistance point. We get to there and everybody thinks, oh, we're right now. Here we go. We're going up. And of course, there's our resistance point. We get through that. Oh my goodness, everybody's long. Right? So now that we've got everybody long, we've got to start working it back again. So we've got a top Oh, now we've got a lower top and we're bouncing around. We've got 4 tops here now. All right, there's our resistance point there, 4 tops. And everybody thinks, oh, we can bring our stops up. We've got a great place. Now look, we can bring our stops up from down here somewhere, under there, bring them up to there. And so we go. Oh, and there it is. There's the wipeout. Oh no. And if we come back and put that on here, come back to over here, where's that level? Back in here. So they've got it back to that level there. That's where everyone was cleaned out. So obviously that's where the positions have got small enough that they can manage it. So they've got it back down to that level there where they can manage the positions if it goes long from there. But let's see what happens. Are they still ready to let it go? And of course, you can bet that when they're doing this, when it finally goes, it's going to be a time in the market when the least amount of traders are on board. When is the least amount of traders on board? Either the first 3 hours Monday morning or from over in Europe, the last part of the session or on Friday. The big end of town doesn't normally do it. So we've got here, it's coming down, it's going up. Everybody brings their stops up. Oh no. And here we go. We've got to have one more bounce at taking the stops. Right? And then once that's done, once they've taken that final tranche of stops out, now what they need to do is push this market as hard and fast as they can to get it far enough up that everybody's too scared to take a position, right? Because if you come in and see that there, you've got to put a stop a whole 60 points away from the market. Most people can't do that. Most people are running on a 10 point stop or some minuscule thing like that. So it gets the nervous Nellies are not going to do it because they think, oh, well, it's somewhere here, it's going to turn and go down. And of course, when it gets to here, it's turned, they'd all start taking short positions again. And of course, what does it do? Ladies and gentlemen, there it is. It goes up. There's the target, the daily target, taken out at about 3 a.m. in the morning, our morning here. And there's the job done. They've got it to where they need it to go from back here on the breakout of the 11th. And I would be pretty much going to guarantee there would be about 3% of traders in there that would have made money out of that move. They all would have got here, started to second guess themselves when this comes in, and then this is the final shakeout where it comes up and right down here to take out all the stops that are sitting in this big area under here. Right, and of course, this is where the bulk of the stops are going to be. You've got 2 very solid resistance points here. These 2 here, if we just make them solid lines and a bit heavier, there and there, put that on there. They are where all the resistance here that are going up. And where does that go? In one bar, it takes them all out as nice as you like. So there you have it in a nutshell. So when you understand what's going on, all I'm looking for in a situation, once I see that, I'm looking for big spike bars down. Looking to, as soon as there's a big spike bar down, waiting to see where it stops and take a long position under there if I want to do a long-term trend. I know where my stops have got to be, and the stops have got to be right back down underneath. Here, fortunate enough, it moved away. And of course, it always moves away in one bar first, and then this is the shakeout. Because what they've been setting up in everyone's mind is it's going to reverse. It's going to go one way and the other way, right? They've set everybody's mindset there that know this. Oh, it's going to reverse. And that's what this was doing here. They were playing on your mindset that this is going to reverse. So what you have to have, if you're going long, your stop's down here, and that's where it stays. Right? So you can take the other positions in here, right, and live with it. So you don't want to get caught up with too many positions. But what I'm saying is this is what goes on. And this, if you didn't know, the point that I'm trying to make, if you didn't know that there was a long-term target there, you've got no idea what's going on here, what the hell's all there. But I sit and watch that, and by the time I got to Saturday morning, I had such a smile on my face. I thought, you know, that was just poetry in motion. How they screw it backwards and forwards, backwards and forwards, backwards and forwards, until they can get to a thin market, and then they can let it go, and it will do the opposite then of what it's done all the time. So there you go, guys. There's an insight into short-term trading, what you've got to have. So how do you handle that? You either have positions like what we do with the PT3. We're taking a small chunk out. We've got one out of here, maybe another one here somewhere, and so forth and so on over the time, right? And the EA, well, it's taking in this trend here. It picked up these trades in this trend going up Friday night, and so forth and so on. But yeah. Anyway, guys, thanks for watching. It's a bit longer, but I just wanted to share that with you and hope that it gives you all a bit more of an understanding of what you're actually dealing with. And probably more prominent is, as soon as you think you've got a perfect place to put a stop loss, you just try and get a target that's going to go to there. Get yourself in a situation, because you know at some stage, and more so in the end, they are going to run the market to that point before it ever goes anywhere. There you have it. All right, guys, take care, safe trading. Back to a normal roundup next week, unless there's something else. Through the week, I want to put out another one on gold and a couple of other things. The massive anomalies, what's happening there. Gold's making new highs, and gold stocks up until last week were making brand new lows. And I'll give you the reason why that's been going on, and if it's going to change and how long before it changes. All right, guys, take care. Catch you in a week.